Welcome back. This is Si Wing Yi, and today I'm going to talk about the investor purchases in the overall context of the US housing market. All right, so let me share my screen, and the source of this information come from CoreLogic, and here it is, CoreLogic, and the title is The New Normal. Single-family investor activity remains steady in Q3 2022. All right, so the article, before we begin, just so you know, I'd like to reiterate that I am not a local realtor. I have no specific market in place. So I'm merely a high-level real estate consultant, real estate investor, if you will, and thousands of investors in my network depend on me and my team to help them buy turnkey cash flow properties in low cost, prudent, fast growing markets. All right, and for the lack of a better term, I help mom and pop investors, the average Joe or the average Jill, for that matter, out there. So whether you are a beginner, a newbie, or experienced investor, and regardless of where you live in the country, you have the ability to buy cash flow properties in very good markets that will cash flow, okay, with financing. Turnkey single family home investment methodology, and I've been doing it for several decades. So this particular information I'm about to share with you, obviously it resonates with me. But the definition of real estate investor in this particular article is a very broad base, and it breaks down the different type of real estate investors. So of course we can go over it. So let's begin. The share of single family homes purchased by investors increased by 5 percentage points from Q2 to Q3, while purchase levels remain steady at around 100,000 units per month, suggesting that Q2 decline has flattened. All right, so figure one indicates the share of home purchases made by investors by month from January 2019 to September 2022, the last 3 years during the pandemic, if you will. So, of course, as you can see here, these are the percentages of the overall housing purchases. So, we're breaking this down to primary home buyers, the people they're gonna buy homes to owner occupy, which is the main theme of discussion among the mainstream media. Very rare the mainstream media, they talk about real estate investors purchasing properties. So except in this particular case, in this CoreLogic article, it does highlight the different type of real estate investors and how they're buying properties, where are the locations they're buying, and what's the percentage share of the overall housing activities in a whole broad-based scenario. Right, so therefore, in 2019, prior to the pandemic, investors are buying, as you can see right here, January 2019, around 18% of all homes out there. Then it had a dip. 6 months later, in July 2019, it has dipped down to around 15%, and went back up again to almost, like 20, the low 20% of the overall housing market right before the pandemic began. So soon as the pandemic began around March of 2020, throughout 2020 and 2021, just like primary home buyers out there, real estate investors purchases has skyrocketed almost on a vertical perspective from a low of 14% of all home purchases at the beginning of the pandemic to all the way, we're talking like all the way over here to the the third quarter, Q3 of 2021 to a whopping 27%. So basically, around Q3 of 2021, investors have purchased around one quarter, a little bit more than one quarter of all home purchases in a total aggregate. Then for some reason, it went down from 28% to all the way down to 22% at the beginning of this year. And just like primary home buyers, investors are also affected by the mortgage interest rate. So as a result, when the skyrocketing, actually during January 2022, it went back up again. And the skyrocketing event didn't occur until around April or May. So the beginning of this year, investors' purchases went back up again, all the way to 28% of all the home purchases. Then when the interest rate has skyrocketed from approximately 3.5% at the end of Q1 2022 to all the way steadily, the interest rate has gone up, 4%, 5%, 6% to all the way to 7% toward around September of this year. Then we see the investor purchases has plunged, just like pretty much the rest of the other buyers, right? So anyway, then from July 2022 until October, July, August, the following 4 months, the investors have gone to the opposite trend versus the primary home buyers, in that investors have picked up the purchases again in the past 4 months, skyrocketing back up to almost 25%, which is one quarter of homes that were purchased by investors. One quarter of all the homes throughout the country. By the way, when I say investors, okay, here's my guess, and I will show you the category of what type of investors are buying these kind of homes throughout the country, and I will show you the geographic region momentarily. But there are 3 or 4 types of investors. Some investors come from Wall Street, the institutions, the hedge funds. They are mega huge. They have $1 billion worth of cash available to buy, a whole bunch of homes, several thousand homes, single-family homes at one time in a specific market. Those are mega investors. Those Wall Street hedge funds, institutions. Then you have the medium-sized investors that are a smaller group. They are not from Wall Street. They are from very, very wealthy individuals pooling their money together. Maybe we're talking 100, 200 of those mega rich multi-billionaires out there, individuals pool their money together to buy a whole chunk of a single family home in a specific market. Then the last and final category are the mom and pop investors. They're not doing it in a coordinated way. They just on their own, through their own individual efforts, with some sort of assistance. Those mom and pop, regular folks out there, people making normal amount of money, those are mom and pop investors. They're buying the low cost cash flow homes in certain markets. So just get that, want to clarify with you in that respect. So let's get back to the charts. All right, so figure 2 talks about monthly home purchases made by investors and non-investors. All right, now they have broken down. Again, non-investors, just to clarify, they are regular owner-occupied individual buyers. They're buying the homes to live, to occupy, to live for themselves and their family, and they're paying their own mortgage. It's not an investment home. Whereas investor purchases on the blue line are pure investors. They buying to rent it out, rent the property out, rent it to a tenant so they can collect cash flows and appreciation, tax benefit, the whole 9 yards. All right, just want to be very clear. So this figure kind of tell you that the non-investors, of course, primary home buyers, they are they're going through some periods of up and down purchases based on the interest rate. So and the majority of them they're buying homes from 250K to 500,000, right? Primary home buyers, they can they qualify for those kind of purchases. But however, investor purchases they're a little bit different. They're buying lower cost entry level single family homes. The type of business model that I preach over many years with myself and my own investors portfolio. You buy at very low cost, $50,000, $100,000, $200,000, $300,000 single family homes that rents for $1,000 to $2,000. Give you a nice rent to value ratio. The numbers make sense, right? Investors buy these low cost homes knowing with the financing with 25% down payment in this price range, 50 to 150K, right? 2019, 2020, 2021, so 2022. See, so I'm saying. So I'm giving you some good education in case some of you out there, as you're watching my video, you want to become a real estate investor. You don't chase after higher cost homes because the rent, the tenant, they are not going to pay you enough rent to cover your mortgage and your taxes and your insurance and your property management fee, et cetera, et cetera. By buying low cost homes, the rent you can collect match, the rent you can collect will exceed the total of your monthly debt service, which is your mortgage, on your investment loan, your taxes, insurance. At the end of the month, you will receive a positive cash flow. Am I being very clear? It's a very different scenario. A person buying a primary home, a person can buy buy a primary home to live. They have the ability to buy very high price homes from $500,000 to $1 million because they make on a salary 100, 200 grand. And they have the down payment, so they buy higher price owner occupied properties as indicated on this graph. But investors, it doesn't matter investors' salary. Investors buy based on moderate income that they have. They can qualify for the loan. They have good FICO score. Investors, they have 25% down payment. So they buy based on return, based on yield, based on low cost home purchases that can match by the rent that can cover their low cost debt service. Does it make sense? All right, hopefully it does. So anyway, so this is we're talking billions of dollars. I don't know how much, right? I don't know, could be trillion, 10 billion, 20 billion, could be millions. I don't know. But I think that from a high level, you need to understand that the blue line is mega investor. The mega investors right here, the blue line, they buying this number, the share of investors purchases by size, the size of the purchases, the amount of volume and the prices, total prices per different type of investors. You have the blue line is mega investor, the large investor is orange color, the medium investor is green, and the small investors or mom and pop investors, just the one I work with, my network work with over many years. Small investors or people making, people have a salary of 100 to 200 grand. They have like $50,000 to $100,000 to invest. They can buy 2 or 3 houses, single family homes for $50,000 to $300,000 range. They have down payment. Those are mom and pop investors that I work with. This is so therefore it's a small investor, medium investor, are people that have very wealthy, the top 1% of the U.S. population. The medium investor, they have maybe $500,000 to invest. It's an individual person. They could be a doctor, or a lawyer, or a highly compensated individual. They want to have a portfolio of 5 to 10 homes, and they have about $500,000 to $1 million to invest. They're willing to do financing. So these are the top end scale of the upper echelon of the hardcore investors. And large investors and mega investors, like I said, they are Wall Street hedge funds. They have billions of dollars. They, we talk about, homes for rent, invitation homes, BlackRock, Blackstone, this common Wall Street institution that have massive amount of money, and they're buying a whole bunch of single family homes from builders in many markets, Sun Belt market, mainly in the South and Southwest and Southeast, like Phoenix and Las Vegas, Atlanta, Georgia, Charlotte, North Carolina, Raleigh, North Carolina, and Miami, not Miami, Florida, no, Florida, other areas of Florida, Orlando, yeah, Orlando, Jacksonville. So these mega investors, institutions, and large investors, the large funds, the syndications, they're buying thousands of homes from a particular, from the national builders. So they can rent it out. It's a build to rent kind of business model, okay, build to rent. These investors buy thousand homes in a particular area, in a particular neighborhood, and with all cash, they've done the calculation of the yield or the return, and they in turn rent it out to tenants. So for long-term buy and hold portfolio from large Wall Street institutions. Does that make sense? All right. So anyway, let's skip some of these, which is not that relevant. I want to share something that are important. I don't want to make this video too long. Hey, I'm not going to speak too much about the iBuyer. In case you have not heard, Zillow and a few other iBuyers there and Redfin, this concept, this business model just isn't working. So the iBuyer market share, it had a pretty decent start about a year and a half ago, but they are going bankrupt. They are exiting this game. The iBuyer business model is not working, and they're gonna go bankrupt. So the iBuyers are, again, they're not Wall Street, they're not institutions, but they're a little bit smaller. It's the way their business model just isn't working. So I'm not going to talk too much about it. So in terms of highest 10 investor shares by metropolitan statistical areas, Q3 2022, and as the housing market continues to cool, California is the primary state propping up investor share. Go figure, right? California have a very, very expensive. I live in California, San Francisco Bay Area for the past 4 decades. So I understand. So we talk about mega investors can buy in California, but my mom and pop investors, no, they're buying the low cost market, very low entry level type of homes in the Southeast, mainly South and Southeast. But anyway, so over here, here are the mega investors, okay, and they are the red color. The large investors are green, medium or orange, and small investors, mom and pop, or blue. So let's look at each market. So the more mega investors are buying in Atlanta, Georgia, than any other market among the top 10. And then the second largest mega investors buying are in Memphis, Tennessee. So, Midwest markets are very, very low cost. They are very prudent moving forward. The returns are good because the rent versus the purchase price of a particular single family home in the Midwest market is a very high yield, very good cash flow for that matter. So my takeaway from this is orange color, let me say orange color, or medium investor. They're a little bit above mom and pop investors. The orange color, which is comprised of like 30% of the share of the investment purchases. And of course, the blue one is the mom and pop investors, almost a little bit more than 1/3 of all the investors purchases are done by mom and pop investors. Okay, and here are some of the market there are investors are buying mainly. San Jose, Sunnyvale, Santa Clara, that's where I live. Very high cost, very extremely expensive. I personally would not want to buy investment properties as a mom and pop investor in California. No way. But these are deep pockets investor. They buy with all cash. That's what they look at. LA, Los Angeles, Atlanta, Georgia, like I said before, Memphis, Tennessee, McAllen, Edinburgh, Mission, Texas. This is right in a border between South Texas and Mexico. So interesting. Many investors going down here, to South Texas, which is like 2 hours below San Antonio. Interesting. I could see a little bit of a trend. Many investors are targeting the South Texas. I had to believe that the main areas of Texas, like San Antonio and Austin and Dallas and Houston, they are increasing at such a large amount. The yield and the returns are not as high anymore. So a lot of investors are going to the cheaper entry-level markets in Texas and South Texas by the Mexico border, McAllen, Edinburgh, and Mission the next the next wave of investor purchases. I'm just thinking out loud. I have no idea, but this is surprising me in a way, a little bit surprising. Okay, let's move on. Phoenix also has been a top investment market for a number of years, and it will continue to do so. Las Vegas, definitely. And El Paso, interesting. El Paso is all the way on the western area, borders New Mexico, by the way. El Paso is really on the deep end of West Texas, and which is away from all the hustles and bustles of the mainstream Texas other metros. So again, not surprising. El Paso is a very low cost entry-level homes, 150,000, $200,000 homes. So the cash flow is very, very good for all different type of investors. I notice here, mega investors are not going there. Mainly medium investors and mom and pop investors are entering the West Texas El Paso market. And of course, Riverside, San Bernardino is a huge inland empire in Southern California. I've been there many, many times. It's doing well, but the home prices are pretty high as well. The suburbs of LA, Southern California, Riverside, San Bernardino, Ontario. And then finally, San Antonio, New Braunfels. I love this market for many, many years. Many of our investors have entered this market over many years to buy low-cost cash flow homes. So this 1, 2, 3, 4, 5, 6, these top 10 markets are not surprising to me. So as I conclude this, CoreLogic public records data 2022. Here are the summary by CoreLogic. Whoever wrote this article. If historical buying patterns hold, the investor share will likely continue to rise in Q4 2022 as owner-occupied buyers wait out the winter months. Okay, in 2019, 2020, the market investor shares was at its highest in the month of January. The future of investor purchases beyond that is more difficult to predict. Mega and large investors seem to be ramping down activity, but whether small investors step up to fill the gap is an open question. And here's the highlight that I want to emphasize. Housing is becoming increasingly unaffordable, right? Creating a strong rental demand that is attractive to investors. That means, you know what that means? You know what's my takeaway for that? That means the rental market is going to be very strong. I will say this, having been doing investing for many decades myself and helping so many investors over the years, that right now right now is a renters nation. There are more renters out there than ever before right now due to the home affordability, skyrocketing of home prices, and the current interest rate of 6 to 7% have caused many potential prospective buyers in the sideline, unable to buy a home for many, many reasons. So furthermore, so many homeowners are locked in at the low mortgage rate. Do you know like 70% of homeowners right now, they have a mortgage rate at 4% or below? And around 25% of homeowners have a mortgage rate of less than 3%. So they're locked in. They're not going to sell. They're not going to get rid of they're going to hoard their mortgages. They're not going to sell their homes. Those who must move for personal reasons and have considerable savings might prefer to rent currently owned homes. Why? And even if somebody want to sell their home for personal reasons, this sentence states that why sell when you can rent it out? Because you know how easy the homes are being rented these days, because there's a lack of homes to rent, there's a lack of homes to buy. So many prospective renters out there that cannot afford to buy, they need to rent. So people that want to sell their current homes, they don't need to sell. They just rent it out and collect cash flow and have renters to pay their mortgage, right? So I will repeat this last sentence. Primary homeowners right now, who must sell for personal reasons. They do not want to sell because they have a lock in their historical low mortgage rate. Instead of selling the home and get rid of their amazing low mortgage, they're not going to do that. They're going to rent it out. They could easily rent their homes most of the time to renters because there are many more renters than ever before in history. And you can easily, for the most part, you can rent your homes very easily. So the renter can pay your mortgage and all that stuff. And so homeowners are renting their homes out instead of selling. And why would they give up mortgage rates that could unlikely to be again they're going to see for in their lifetime? So this 4% or below mortgage rate is a historical low. We will never see that again in our lifetime, or maybe beyond our lifetime. So my takeaway for this is investors will continue to enter the single family home market. Wall Street funds, America, home for rent, Invitation Homes, Blackstone, BlackRock of this world, they are buying, and Morgan Stanley Chase, they have about $1 billion of amount of money to buy thousands of single family homes in various markets: Atlanta, Georgia, Orlando, and Texas, all over Texas and Arizona and Colorado and Idaho and the Vegas. Okay, so that's the takeaway is investors, big, medium, and small, will continue to focus on single family homes, entry-level homes, 250K, 300K. These are the numbers. The numbers in this make sense. This is the criteria. What's that word I'm trying to use? Anyway, so that's what's happening. So mom and pop investors, you can participate in this game. So investors purchase are doing very, very well in this market, in any market, because they have a buy and hold strategy. So the takeaway is investment real estate, single family homes, as this article has indicated, everybody wanting to jump in the game, or one segment of the market that I have not even spoke about yet are foreign investors. Foreign investors, during the pandemic, of course, they have no capacity to come over to the U.S., but I believe they are re-entering the real estate market again. Foreign investors from Europe, from Australia, from Middle East, from South America, and some from Asia are re-entering the U.S. home market because it's a safe haven, and homes are still very affordable, very cheap for foreigners, and they are going to be a heavy hitter as well. All right, so investment real estate is going to do well for the long term. Many are pulling the trigger even on this current economic situation. So hopefully you're one of them. All right, so I love talk about this because I've been on this investors for many, many years, and I have helped thousands of U.S. investors to buy out of state, to buy turnkey properties in a very low cost, entry-level homes, single family homes, and rent it out for cash flow at financing 25% down payment. All right, thank you so much for listening. If you received a lot of value from this presentation, please smash the like button and subscribe to my YouTube channel, and also enter your email into my website below so you can become a member, a free member of our real estate investing community, so you can receive free real estate email information to your email inbox, so you can take action on to help yourself achieve the goals. Thank you so much. This is Steven Yi. Have a nice day. We'll see you in the next video very shortly. Bye-bye.